That's the tutor. Okay, and in today's tutorial, we'll be talking about, dissecting the course ACC203, and this happens to be the third class we're having on the course ACC203. All right, so with this being said, let's hop straight into it. Okay, so we have ACC203. All right, just as the thumbnail has it, we're going to be talking about subsidiary books. And under subsidiary books, we're going to be looking at the day, right, the purchase day book in particular. All right, sales subsidiary, all right, books, and the subtopic will be purchase day book. Start with purchase day book. Okay, not debit, please. Purchase day book. Okay, so we have that as that. Now, subsidiary book, we have documents that are exchanged, okay, between buyers and sellers, which are binding on both parties. All right, is what we refer to as. Now, before we can talk about any of these two, all right, there's something we need to first understand. All right, we need to understand what it means by, okay, we need to understand what it means by source documents. Okay, source documents. All right, when we say source document, what are we talking about? All right, source documents, all right, are those documents, all right, the document that, all right, when exchange, all right, happens between buyers and sellers, all right, and this exchange are binding on both parties, all right, the document employed is what we refer to as source document. Now, source documents are binding documents, all right? Source documents are binding documents signifying what? An exchange between buyer and a seller, all right? Binding document signifying the occurrence, all right, or let's just go straight to it, signifying, all right, an exchange, all right, an exchange between a buyer and a seller. All right, basically these source documents are used, all right, to what? To prepare books of original entries. All right, source documents are used to prepare books, all right, of original entries. All right, they are used to what? Prepare books of original entries. Okay, now let's talk about purchase document and purchase day book itself. Now, when we say purchase day book, what are we talking about? Purchase day book is what? An invoice. All right, now purchase day book is referred to as purchase journal. Okay, now purchase day book or purchase journal is said to be the invoice, all right, invoice exchange between a buyer or a seller of goods, all right, when service is being rendered. All right, now that invoice that is given, all right, to a buyer or to a seller, all right, this invoice is what is used as a source document recording in the purchase day book. I don't know if we get that. Now, purchase day book is a what? A subsidiary book of accounts used to record. Now, I made reference purchase day book. I made reference to what I call invoice. And let's not forget, we discussed about this already when we said invoice are basic, all right? Basically, invoice are originally, all right, to record, all right, are originally used to record credits, all right, goods or services given or sold on credits, all right. That's why we have them, all right. But unfortunately, reverse is the case. Invoice now, whether sold on credit or sold as cash or payment is being made, it still goes to invoice, all right. But originally, invoice is meant for goods or services sold or rendered on credit. Okay, now purchase invoice now is the source document, all right. Invoice says as the source document used, right, source document. Okay, invoice is used as a source document enhancing a source document that enhance, all right, a source document that facilitates, all right, record in a purchase day book. Now, purchase day book itself, just a moment. Now, purchase day book is said to be what? A subsidiary book. Okay? Purchase day book is said to be a subsidiary book of accounts used to what? Record all goods and services bought, all right, or received on credit from a third party in order to what? Occur, all right, in order to reflect the particular amount. Now, purchase day book is said to be what? A subsidiary book. A subsidiary. All right. It's said to be a subsidiary book. And this subsidiary book is what? Is used to record all goods. All goods and services bought, all right, or received on credit. Okay, bought or received on credit. That is what the subsidiary book of purchase day book is all about. Just to record, all right, and to record all these things, the source document used in the purchase day book is what we refer to as invoice, because invoice has to do with records of goods or services bought or rendered on credit. Now, you should also know that purchase day book, all right, purchase day book or purchase journal is not an account, all right, because it does not have debit or credit side, all right. It's not an account, not an account, because it has no debit side or credit side, all right. So purchase journal or purchase day book is not an account. Okay, so we have that as that. And the process, there's something called ledger. All right, when we say ledger, we are talking about the process of what? Transferring from purchases day book. All right, now ledger is where we transfer. All right, ledger is where we transfer, all right, purchases day book. All right, records on the purchase day book is being transferred to a ledger. All right, records of purchase day book, all right, is being transferred to the ledger, and this process is what we refer to as posting. All right, this process is referred to as posting. So we have done that. Now let's proceed. Let's talk about the return inward journals. All right, return inward journals. Okay. Now let's proceed. Return inward journals. Return inward journals. Now when we say return inward journal, what are we talking about? Now, another name for return inward journal is return day book or sales return book. All right. Another name for return inward journal is what we refer to as return inward day book, return inward day book, all right, return inward day book, okay, or sales return book, sales return book, return inward journal, or return inward day book, or return or sales return book. Okay, so we have that. Now when we say return inward journal, what are we talking about? This is a book used to record goods, right, previously sold to customers but were later returned. All right, goods that has been sold, not on credit. All right, goods that have been sold and account has been balanced, and along the way one thing or the other happened, and these goods were, all right, happened to be returned. All right, these goods had to be returned, all right, by the buyer to the seller, either in whole or in parts, probably as a result of maybe wrong specification, model or color, maybe along the way of during the process of getting the goods to its final destination, there happened to be a defect, maybe a disagreement between the buyer and the seller, all right, which could be, all right, traced to either the pricing, the discount, or the payment terms. All right, these are the things that could have led to the returning of the goods that has been bought to this good that has been bought, the returning of this good back to the seller, or it might be shortage in quantity. Maybe the buyer orders for 5, paid for 5, and gets 2. All right, and maybe government policies. All right, but now the point is that whatever it is that might have transpired after these goods have been sold, or after these goods have been purchased, all right, by the buyer, so the goods had to now be returned. All right, now this kind of goods, all right, let's not forget they had already been sold. All right, they had already been sold. The seller has already balanced that account. All right, so now where will the seller record this? All right, where will he or where will she put these returned goods when the money has been collected and the account has been balanced? Now that is where we now have return inward journal or return inward day book. This is where it comes in. Are we together? So the return inward daybook is also not an account. Okay. All right. Used to record previously sold goods. All right. Used to record previously sold goods to customer. All right. Sold goods that were later, all right, returned, all right, that were later returned to the what? To the seller, returned by the buyer, to the seller, all right, turned by the buyer to the what? To the seller. Okay, and just like as I was mentioned earlier on, all right, there are certain things that can facilitate this action. All right, a lot of things, as I mentioned earlier on, can or must have led to the buyer returning goods he already paid for. Okay, so we have that as that. All right, so let me just list some of these things out. It could be as a result of wrong specification. All right, could be, and this one could be color. Okay, model, etc. We have the model and we have etc. All right, we could also have defect. All right, shortage. All right, in quantity. What you get, what you ordered as against what you got. All right, we have that as that. We also have what we call disagreement. All right, government policies. This disagreement could be maybe the discounts and everything that you're supposed to get and you eventually get. And we have government policy. Okay, all this might have led, all right, all this might have led to the customer returning. I think I need to bring this down a bit. Okay. Yeah, I think that's better now. Might have led to the customer returning the goods. Now let's proceed. Now we have journal or journal proper. Okay, we have journal or journal proper. Journal or journal proper is one of the what? Book of original entry. All right. Journal or journal proper is one of the book of what? Original entry. Okay, one of the book of original entry. Now, book of original entry, and this book is used, all right, this book is used to record any transaction which cannot be what? Conveniently recorded or classified into any of the other subsidiary book. Okay? Book of original entry that cannot what? Book of original entry that what is used, all right? Records of transactions, all right, that cannot be easily recorded in subsidiary books is recorded under the journal proper. Now, let's do that again. Journal or journal proper is one of the book of original entry that is used to what? Record any transaction. All right. This book is used to record any transaction. All right. Used to record any transaction which cannot be what? Conveniently recorded. All right. Which can't be what? Conveniently recorded what? In any, all right, of the other subsidiary books. All right, in any of the subsidiary books. So it goes straight into the journal. All right, now we have sales day book, purchase day book, return inward day book, return outward day book, cash book, 2 column cash book, 3 column cash book, and petit column cash book are all right, examples, all right, of what we refer to as, all right, we have that as that. Are what we refer to as subsidiary books. Okay. Some transactions, all right, some transactions that are recorded, all right, transactions recorded in journal include, all right, transactions, all right, we have transaction from purchase and sales of non-current assets, adjustment of account, correction of account error, correction of account error, okay, adjustment of account. That's why it says that adjustment, all right, of account. That's why it says that transactions that cannot be easily recorded, all right, that cannot be easily or conveniently recorded in any of the subsidiary books that we have made mention of, all right, in any of the subsidiary books that I made mention of has to go into the journal or journal proper. Okay, so we have purchase and sales of non-current assets on credit. Assets on credit. All right, these are the things that will go into the what? Journal proper. So we have that as that. Now let's take also transfer of personal property. All right, transfer. How do you record this properly? Of personal, transfer of personal properties. Okay, so we have all these as this. Now you see, this is what we have as journal proper, and you can see that it's a book of original entry, and the book is actually used what to record transaction which cannot be conveniently any transaction that cannot be conveniently recorded, all right, in any of the subsidiary books. And we made mention of the subsidiary books which we refer to, all right, just to mention, we have them as subsidiary books. Let's highlight that on the board here. Subsidiary books. Okay. Subsidiary books. Subsidiary. All right. We have the sales day book. We have the sales day book. Okay. We have the sales day book. We have the purchase day book. All right. We have the purchase day book. All right. We have the return inward day book. Return inward day book. Okay. Return inward day book. We have the cash book. All right. Cash book. We have the 2 column. All right. And we also have the 3 column. All right. And we have the single. All right. The single colon. You have the, all right. And we have what we call petty cash book. All right. Petty cash book. All right. So we have that as that. So okay, and we have that as that. Now you should also note that a debit in the journal, all right, will also be a debit in the ledger. A debit in the journal, all right, equals a debit in the ledger. All right, is the same thing. Okay, so we have that as that. Now on this note, we'll call it a wrap for today, and by next week we'll conclude with the course and we will commence with another. All right, so thank you very much, everyone. I hope you've been able to gain a thing or two in today's class. All right, just like as I always say, let's do well to bring our notes up to date. All right, if there are any classes you might have missed, do well to go back to the recorded videos. Okay, and as soon as you have gone back to the recorded video to go through the class, do well to get your notes. You have to, right? This is a proper class. As you go through the videos, you are expected to pen down something, right? You are expected to pen down points to make your notes, right? Then you have to take notes, then you can make your notes thereafter. Right? As soon as you are done with this, you are expected to take a picture of the note and send it directly to the class. All right, your respective class. Is how we take measures. All right, it's how we are certain that indeed you are following the classes. All right, so thank you very much, everyone. And I look forward to seeing us in subsequent tutorials. Let's do well and get set for our forthcoming exams, as exams is closing down, very close right now. All right, very soon, I think that should be upper week, we should be commencing with our revision classes, and by then we all will have gotten the exam keynotes, which I'll be giving individual students in the private class. Okay, so thank you very much once again. With this being said, call a wrap for today's class. Bye, and I look forward to seeing you all in subsequent tutorial.